The stock exchange is an important factor in the capital market. It is a secure place where trading is done in a systematic way. Here, the securities are bought and sold as per well-structured rules and regulations. The securities mentioned here includes debenture and share issued by a public company that is correctly listed at the stock exchange, debenture and bonds issued by the government bodies, municipal and public bodies. There are many stocks listed in the stock exchange. A stock exchange is a marketplace or the infrastructure that facilitates equity trading. The history of stock exchanges can be traced back to the 17th century in Europe when merchants and traders would gather in coffee houses to buy and sell stocks and other securities. The first official stock exchange was the Amsterdam Stock Exchange, established in the year 1602 to trade Dutch East India Company shares. In the United States, the first stock exchange was the Philadelphia Stock Exchange, founded in 1790. The New York Stock Exchange (NYSE), which is now one of the largest and most well-known stock exchanges in the world, was founded in 1817. The Bombay Stock Exchange (BSE) was established in 1875 as the first stock exchange in India. Initially, the BSE was a small group of brokers who would meet under a banyan tree in front of the town hall in Mumbai, then known as Bombay, to trade stocks. In 1980, the Ahmedabad Stock Exchange was founded, followed by the Calcutta Stock Exchange in 1980 and the Madras Stock Exchange in 1937. In 1992, the National Stock Exchange (NSE) was established as a computer trading platform. Many large companies have their stocks listed on a stock exchange. This makes the stock more liquid and thus more attractive to many investors. The exchange may also act as a guarantor of settlement. These and other stocks may also be traded over the counter (OTC), that is, through a dealer. Some large companies will have their stock listed on more than one exchange in different countries so as to attract international investors. 4 stock exchanges may also cover other types of securities, such as fixed interest securities, bonds, or less frequently derivatives, which are more likely to be traded OTC. Trade in stock markets means the transfer in exchange for money of a stock or security from a seller to a buyer. This requires these two parties to agree on a price. Equities, stocks, or shares confer an ownership interest in a particular company. Participants in the stock market range from small individual stock investors to larger investors, who can be based anywhere in the world, and may include banks, insurance companies, pension funds, and hedge funds. Their buy or sell orders may be executed on their behalf by a stock exchange trader. Some exchanges are physical locations where transactions are carried out on a trading floor by a method known as open outcry. This method is used in some stock exchanges and commodities exchanges, and involves traders shouting bid and offer prices. The other type of stock exchange has a network of computers where trades are made electronically. Typically, bonds are traded over the counter (OTC), but a few corporate bonds are sold in a stock exchange. It can enforce rules and regulation on the brokers and firms that are enrolled with them. In other words, a stock exchange is a forum where securities like bonds and stocks are purchased and traded. This can be both an online trading platform and offline physical location. Functions of stock exchange following are some of the most important functions that are performed by stock exchange. 1. Role of an economic barometer. Stock exchange serves as an economic barometer that is indicative of the state of the economy. It records all the major and minor changes in the share prices. It is rightly said to be the pulse of the economy, which reflects the state of the economy. 2. Valuation of securities. Stock market helps in the valuation of securities based on the factors of supply and demand. The securities offered by companies that are profitable and growth-oriented tend to be valued higher. Valuation of securities helps creditors, investors, and government in performing their respective functions. 3. Transactional safety. Transactional safety is ensured as the securities that are traded in the stock exchange are listed, and the listing of securities is done after verifying the company's position. All companies listed have to adhere to the rules and regulations as laid out by the governing body. 4. Contributor to economic growth. Stock exchange offers a platform for trading of securities of the various companies. This process of trading involves continuous disinvestment and reinvestment, which offers opportunities for capital formation and subsequently growth of the economy. 5. Making the public aware of equity investment. Stock exchange helps in providing information about investing in equity markets and by rolling out new issues to encourage people to invest in securities. 6. Offers scope for speculation. By permitting healthy speculation of the traded securities, the stock exchange ensures demand and supply of securities and liquidity. 7. Facilitates liquidity. The most important role of the stock exchange is in ensuring a ready platform for the sale and purchase of securities. This gives investors the confidence that the existing investments can be converted into cash, or in other words, stock exchange offers liquidity in terms of investment. 8. Better capital allocation. Profit-making companies will have their shares traded actively, and so such companies are able to raise fresh capital from the equity market. Stock market helps in better allocation of capital for the investors so that maximum profit can be earned. 9. Encourages investment and savings. Stock market serves as an important source of investment in various securities which offer greater returns. Investing in the stock market makes for a better investment option than gold and silver. Features of stock exchange. A market for securities. It is a wholesome market where securities of government, corporate companies, semi-government companies are bought and sold. Second-hand securities. It associates with bonds, shares that have already been announced by the company once previously. Regulate trade in securities. The exchange does not sell and buy bonds and shares on its own account. The broker or exchange members do the trade on the company's behalf. Dealings only in registered securities. Only listed securities recorded in the exchange office can be traded. Transaction only through authorized brokers and members. The transaction for securities can be made. Recognition. It requires to be recognized by the central government. Measuring device. It develops and indicates the growth and security of a business in the index of a stock exchange. Operates as per rules. All the security dealings at the stock exchange are controlled by exchange rules and regulations and SEBI guidelines.